Hey everybody, this is Jose. How are you, everyone? We are about to get started. Let's have a quick sound check, as always. A quick message on the chat box will do. Quick hello, please, so I know you hear me well, and that way we start on time. We got 20 plus seconds, and we begin. Thank you so much, everybody. Okay, thank you so much. Thank you for confirming that, everyone. Very good. How are you, Joe, Joanne? Great to have you with us. Very good. Perfect. Okay, top of the hour, time to get started. Official welcome, everybody. Welcome to the session. Today is June 30, 2022. My name is Jose Blasco, last day of the month. Options trading, that's the plan. We're going to be looking at the markets, looking at what opportunities are available. We'll look at prior trades, we'll look at market conditions and market environment, and discuss it all and all of the above. Before we get started, as always, on the upper left side of the screen, a financial disclaimer. Please read it carefully. This is important information. I always point at the fact that it's fairly short, so I'm counting on you to read it completely. Thank you so much. Jeff, how are you? Good to see you as well. Very nice, everybody. Also, as you complete reading the financial disclaimer, notice the slider on the bottom part of the screen pointing at the fact that on July 9 to July 15, we are running our first crypto course live online. It's super exciting since it's a launch and it's the first time that we are doing this course. There is a special promo for the launch. So there is a 61.8% discount on the course fee. So I would suggest to go to the website on the courses section. You can find the course there and you can register if you haven't yet. Wonderful, everybody. So I will now get rid of the introduction slide, get rid of the slider as well, so we can begin our session normally. Very good. So let's begin, everybody, okay? And by the way, I'm pretty sure that given the email that we sent recently concerning TradeStation and the TradeStation App Store, that probably multiple of you may have questions, since I would expect that some of the attendees are still on the way to attend the session live. I'll do the market analysis, and before we get into trading, I'll have a very brief comment about it because we have specific meetings to discuss this properly, and I will point out all of this and explain the plan, okay? But let's begin first with the market analysis. And the first thing I would like to point is at two figures. The S&P, it's dropping 1.35% today. If we look at the VIX is rallying by 5.33% today. Any comment? Anyone would like to comment on something concerning those figures? Because I mean, there's been many times where the S&P dropped like 0.5% and the VIX rallies 5%, right? So in other words, while the market is falling today and it's looking pretty intense as a drop, the VIX is not really running that hard, isn't it? You guys have noticed that? This is a pattern that is happening for some time already, and is one way to understand that the market is really digesting whatever the news have been out there that are producing pretty strong moves to the downside. Again, we can point at inflation, we can point at Ukraine, Russia, all those news happening out there. The market seems to develop a little bit of immunity to it, since it doesn't matter if the market is falling or rallying, the impact on the VIX happens to be lesser in current times, in current weeks, if you wish, compared to a few months ago. So interesting fact, which again is not going to have us deviate from our normal market analysis and approach to trading, but it's something for us to take into consideration. It's very much linked to what is happening today. If we start with the S&P, which I just switched to the SPY symbol, and we look at the daily time frame, so we can see how 2 days ago we started with a down climate, which is confirmed with a thick dot. So the market is falling, right? And you know, it's pretty decent size of a move to the, sorry for that. Pretty decent size of a move to the downside from here to here in just 3 days. 1.4% down on a large equity index market like the S&P. I mean, it's not the greatest we've seen, but it's certainly a decent move to the downside. But notice how the implied volatility of the calls and the implied volatility of the puts have a very, very severe fight. A few days ago, while we were still in a down climate, we had the blue go above the gray. And for the ones of you who are new to the sessions, the blue line represents the implied volatility of the calls, the gray line represents the implied volatility of the puts. So in other words, while we were in a down climate, being the bears were winning, if you wish. So you got clear signs of buyers coming in. Next thing you know, the moment the market turned to be blue, immediately sellers showed up already with the gray above the blue. And now that we are back to be moving in this downwards direction with a down climate, we are having this very intense fight where real-time intraday today, the blue is above the gray by just a tiny, tiny bit. And again, this is very much in line with my observation concerning the VIX, which the markets are falling relatively hard, but there is not an acceleration on the speed of fear. We don't see that in a way that is too dramatic. So it gives us the impression at this moment in time that buyers are in the process of entering the market. Of course, we don't have a clear confirmation yet. For us to have the clear confirmation, we need the climate to change to blue. And if the climate changes to blue in the following days, let's say tomorrow, Monday, Tuesday, something like that. I mean, statistical duration of a down climate is 3. Today is number 2, so we should have another day, which is red, maybe a couple more days that are red. The moment we got a change to blue, if we got the blue line above the gray line, this is going to basically confirm what I kind of sense it's going to happen. But again, notice I use the term sense, which is totally subjective. We don't want to trade based on subjectivity. So I'm just sharing a little bit of market experience. But when it comes to trading actions, we need to wait for that confirmation coming from AutoClimate in this case, setting that market for a turn in price as I believe someone said earlier, exactly, Joanne said on the chat box, that potentially may be coming. Okay, but we need to see that confirmed. But it seems to be building up. So when looking at other market data such as the volume map, okay, here's the volume map. So we can see a lot of equality at this moment in time. So 1.2, 1.1, 1.5. We got puts beyond the average. We got calls above the average. Calls and puts above the average. So it's a pretty tight fight, as we can clearly see here on the left. But also remember, I'm looking at the 3-day average on the left, where on the right I'm looking at the real time. Okay. By the way, Mark is here with us. How are you, Mark? The other day, the screenshot you sent me, you were looking at the 5-day average here on the right. I am not looking at the 5-day average. I'm looking at the daily, at the real time. And notice how real time we can see the blue above the gray. So it seems that buyers are having this pretty powerful attempt to step in the marketplace. So we are, let's call it a couple of days away, 1 day, 2 days away from getting a bit more confirmation of that. But how do we trade today, given the fact that we don't have that confirmation? Well, it's very simple. We kind of have a contradiction building up. We have a down climate, but at the same time, we have the bulls showing signs of coming into the market. So again, non-directional trading would be my favorite approach, unless you just close some trades that reach target and you want to enter more of those trades to balance out the portfolio. So then non-directional trading would be my favorite approach given this market condition. And given the fact that the VIX is not low, I mean, it's not the highest in the history of the VIX, but certainly a VIX of close to 30 is not too bad. Not too bad. So we're talking about 29.6. So certainly we should find setups that may provide us those opportunities. Okay. Again, I believe I made this comment last week when we met. When it comes to finding setups that are valid for non-directional trades, especially when we do credit non-directional trades, such as iron condors, this market condition, I'm talking about the historical volatility of the market, meaning the fact that the market is moving aggressively up and down, makes it a bit more difficult because the statistical ranges are wider. We've seen last week many stocks that we were assessing where the red line, when we look at the probability cone, right here. Okay, so for example, if we looked at, I don't know, I forgot the symbols we were checking last week. I'll just pick something generic, Apple, for example. So if you look at Apple, so you see how the red line is within the blue lines, meaning that the speed of movement of the stock is greater than the implied volatility. And again, that could be because options are underpriced with Apple. But even in cases where we found overpriced options, still we got maybe one or two of those blue lines beyond the red line, and therefore the statistical ranges are quite wide. So it takes time and running multiple trade setups multiple times until we find candidates that pass our rules. Okay, the rules that we use to do our own condors, especially when using the spread select tool, especially when adding the filters, right? Those filtering conditions when I load my template for Aaron Condor preferred parameters, that's quite demanding. Okay, that's really demanding actually. So unless you have lots of volatility or pretty narrow ranges, it's going to be difficult to get passes, and most of the results are going to be failed, which forces you to find setups of higher quality, which in cases like this week or the prior week or the week before, with a lot of historical volatility on the marketplace, basically that translates on you spending more time going from chart to chart to find setups that you are okay with. You could certainly be a bit more relaxed than me when it comes to your rules and use filtering parameters that are less demanding. And you know what? Like everything in life, like trading, um, my rules are not perfect. No rules are perfect. Sometimes being more relaxed leads to more quantity of trades that are profitable. Sometimes being more relaxed leads to more quantity of trades that lost. So again, there is no perfect plan. It's all about your trading plan and your trading psychology, your risk appetite, the way you trade, your personality, etc. We all know about that. Again, if you trade like I approach it myself, so I'm quite demanding with parameters, and in market conditions like what we have now, it normally takes times to find the right setups. But I love that, okay, because I love to be picky, and therefore that works with me. Okay, cool. Okay, so this is kind of like where we're at with the market analysis, the market environment. I'd love it if you guys could confirm that you are with me, that all has been understood. If you have any questions about market environment, this will be a great time for you to type it on the chat box, because we are about to begin reviewing trades and getting into new trading opportunities. Okay. While you guys are typing, if all is good, just type okay, all good, something like that, so I know you are with me. And I will take advantage of just a couple of minutes here to also mention what I said earlier about TradeStation. So first, I'm going to type a URL on the chat box, so you all have it in case you have not received the email that we sent to our community as a whole. In case you have not received that email, here's a link. Let me see, did I have it right? Yes, I think so, correct. So I just posted a link on the chat box. When you click on this link, let me bring a browser so I can do this. Let's see, the link is HTTPS appointment link with Jose Blasco to talk about TradeStation meeting. Okay, so this is the link I just, not like that, TS meeting. Here we go. So this is the link I just posted on the chat box. Okay, and this will bring you to a page like this. Okay, where you have a collection of dates that you could select with a collection of times that you could click, and this is customized to your time zone. So notice that I'm in Asia, so these are Asian times. Depending on where you are in the world, it's going to be different. But basically, some of the times are going to be evening hours, some of the times are going to be morning hours. So hopefully this helps everybody. And basically, the meeting that we're going to have here, if I zoom in, so it says here, let's discuss solutions and alternatives as TradeStation will discontinue their trading app store in September 2022. The meeting will take place in a Google Meet room where everyone will have mic privileges in case you'd like to explain your specific case or comment on the situation. Once you pick the day and the time that works for you, you will receive an email from Appointlet with the confirmation and the meeting link. We will keep these meetings small so we can interact easily and find specific solutions per person, per asset, and per trading style. Looking forward to our chat. Jose, that's me. So anyway, again, what I just read, in case you didn't know, now I guess you know, TradeStation is basically halting their trading app store. This has a direct implication. This has multiple levels of or layers of implications. But the first one, which is kind of like on our face, is the fact that auto UFOs and auto climate will stop working within TradeStation. Obviously, this is not a good news for the ones of you using TradeStation and using these tools in TradeStation. Good news is that there are solutions. We will discuss continuity solutions. We will discuss, other possibilities, migrations, all sorts of things. But again, this is a conversation that will take a while. Okay, so instead of addressing it today, we set up those particular meetings. They're going to be small groups, so that way in each of those meetings, everybody can grab the microphone, explain, hey, this is what I trade, this is how I do, this is what I need, and so hopefully I'll be able to point at certain directions that will help you. Knowing that, again, with TradeStation, there will be certain limitations, even though at least two of the solutions that I will provide will still work in a way that is compatible with TradeStation as a broker. So again, there will be an alternative for continuity as well as others. Okay, so we'll discuss it all in those small groups, so we can have customized personal conversations. So because everybody trades differently and has different needs, so we'll discuss it then. Okay, if you guys want to comment on the chat box, happy to maybe extend this conversation just a little bit more now since we are together, but we need to go back to the chart. Obviously, if this is a news which is new to you, probably you have something to say on the chat box, so just go for it. Of course, happy to hear. But again, ideally, you would join us in any of those days so we can just talk about it properly. Okay. Oh, and by the way, one of the things that we are finding out as you guys are getting in touch with us is that many of you didn't know about the fact that TradeStation is discontinuing the App Store, and therefore we took the initiative of communicating with you guys to make sure that all of you are going to have a solution and continuity in your trading. You don't want to get stuck just because there was no plan. Okay, we gotta make sure that there is a plan. Cool. Okay, so back to trading, and please, guys, confirm on the chat box that you guys are with me, because everybody got so silent on the chat box. So maybe you're just me, maybe you're just grabbing the meeting, and that's why. Fine, but I'd love to know that you are with me and ready to begin the session. So positions. What is it that we have in the market? Okay, we're gonna discuss this very quickly because it's exactly copy paste from the last week with Verizon. Okay, thank you so much, Mark. With Verizon, if we look at Verizon, there is not too much to discuss. We know that based on the trade plan with Verizon, as long as we reach 55, we're gonna get the maximum profit of the trade. It is indeed doable because we still have days to expiration, but we need a push with the markets. If the market is going to go down, then no. Now, if the market is going to go up, well, notice that stock is only dropping by 0.15% when the market was dropping like 1.1+% earlier. So, in other words, this stock has a lot of relative strength. And if the market pushes up, we could see Verizon. Look at the speed of movement. Okay, look at the speed of movement from 42 to 52. That's $4. So we can see Verizon really rally to higher levels very quick, and we could certainly get to 55, even though it needs to start happening. If it doesn't start happening, then it's not going to happen. Okay. Now, is that a bad news? No. Why? Because the way we construct this trade and the way we manage the trade, so this trade cannot lose anymore. And worst case, if I am not mistaken, was a case here, my positions, where we are going to make $36 per contract, no matter what. Yes, exactly. $36 per contract, no matter what. This is kind of a sure thing. Without the kind of, it is a sure thing because it's a spread. So no matter what the stock does, $36 are locked in. So we have plenty of peace of mind here. But again, it would be nice to see that stock rally hard so we can make those additional profits. What about Delta Airlines? Delta Airlines is a complicated one. Okay, Delta Airlines is a complicated one. Again, it's what's happening with Delta Airlines is within a plan. Not every trade is profitable, and Delta Airlines is not looking good to end up with a nice profit unless things change very quickly. But at the same time, it's all under control. So what's happening with Delta Airlines? Well, we started with a double diagonal. which we have been massaging and massaging and massaging since we started the trade. But the problem is that while we've been massaging this double diagonal, this double calendar, the stock kept falling and falling and falling, and it's been falling very hard, like very, very hard. If we look at the chart of Delta Airlines, it's been way beyond what statistics would have suggested. So notice how, if we look at the probability cone on Delta Airlines, we entered the trade on that day. Okay, on that day, the probability cone was suggesting that Delta Airlines will reach that level on expiration, which is that date. Okay, and notice that we are already here, which is below the red line, and it's still 2 weeks to expiration. So in other words, that stock has moved way too fast, way too far. And when that happens, it's a problem because you cannot roll the call side. So you cannot take advantage of diminishing costs for the spread because the call side cannot be rolled. And when you roll the put side, since the put is so deep in the money, again, the extrinsic value you collect is very minimal. So almost every roll is kind of like for break even because you need to pay commissions to do the roll. So in other words, you are not really helping the trade to diminish its value, and therefore we are not accomplishing to lower the $151 of risk that this trade has. We are not accomplishing the goal of lowering that, which is the normal thing to happen when we do the double diagonals. We normally do that quite easily, but of course, when a move of such magnitude, I mean, it's pretty impressive, isn't it, happens, so obviously we cannot do it anymore. So again, good news, risk is under control, absolutely, since day one, not a problem. Bad news, we are not, no matter how much we try to massage the trade, we are really not alleviating the problem. And that's going to stay like that unless the stock really takes a pretty strong rally to the upside, and now we're going to be able to help. So we need that rally. Okay. The good news is that when a move is so strong in one direction, typically it's not sustainable. So we may have a very aggressive bounce in the opposite direction. We need it badly to help the trade, and of course, we don't have a crystal ball. We don't know for sure what's going to happen. Hopefully, it happens soon, so we can take advantage of a couple more rolls. This week roll and the week after roll. That would be great. Let's see. Okay, let's see. We will see that in as time passes. In the meantime, let's see and let's take a look and see what we can do. So first of all, notice how the call side, which I said we cannot do anything with it. So you can see that on the last week, I placed an order to sell the 43 call that expires on July 1st at 15 cents, good till cancel. And notice how I was not filled. Why is that? Well, because let's take a look at the option chain. If we look at the option chain on Delta Airlines, and we look at July 1st and July 8th, which are the two expiration dates that we care about at this moment in time. So when we look at the 43 and 36, well, that's what we care about. So 36 and 43, and I don't need the money, and I'm just going to select one strike. So we have less data on the screen. So notice how the 43 call that expires in July 1st is trading at 4 cents. There is not even midpoint price. And the one that expires in July 8th is also trading at 3 cents. So in other words, there is no premium. And why is that? Well, because the price of the stock dropped so much. So that 43 call is so far out of the money that, nothing is helping. Okay, so what are we going to do? Well, we're going to do the same thing again. It's going to be the third week in a row where we are replacing the order. Instead of July 1st, it's going to be July 8th. I know I won't get filled at 15 because the current bid or ask was 3 cents. So there's no way I'm going to get filled. But again, if the stock was to take one of those very strong rallies, so maybe I'll get that premium. And then, my limit order that will be there waiting, will get me filled. So I'm just going to place this order in the market right now. Okay, and that way this order is now working. Again, I'm not expecting at all to get filled, at least not anytime soon, but the order is in just in case there is this, strong rally and that option gains value and I can get filled at 15 cents. This would lower the cost of the trade by 15. Let's see if we get that or we don't. On the other hand, we got the 36 put, okay, which is very deep in the money. So the 36 put is currently trading at 745, 725. If I roll it, notice how the roll is 740, 725. So it's problematic because if I get out at if you think about the midpoint between 45 and 25 is 35, and the midpoint here between 40 and 25 is a little less than 35. So again, it could be cases where you do the roll and you have to pay a bit to do the roll. There could be cases where you do the roll and you get a tiny credit, but the credit is so small, it's almost break even, that basically you pay for the commissions, which is what I was saying, which is exactly what happened last week. So let's see if we place an order to do the roll. So create a rolling order using that July 1st and moving it to July 8th. Notice that if we do it the way it is, we're going to get a 5-cent credit. So that basically pays for the commissions. I mean, we get $3 extra, but it's fine. So I'm just going to put it there. And out of gaining more time for trade practice, I'm just going to push it to be a market order. Please don't do that. I'm just doing it so I get filled for practice purposes, but do not do it with market orders. So I got minus 0.01 cents. Actually, I pay 1 cent of debit. Again, it showed 5 cents of credit. I'm pretty sure that with a little bit of patience, you can get it at maybe 3 cents of credit, just to pay for the commissions. I'm pretty sure with patience you can do that. Okay. You try to roll the put at 15 cents, no takers, Mark. Yes, exactly. At 15 cents, you won't be able to. The most I got here was 5 cents. So if you try 15 cents, you will have no takers. So you're going to have to relax your order price to be more around 5. I would start with 5 and see what happens. And if you don't get filled at 5, try 4. If not, 3. And again, as long as you get paid those commissions and you roll, you're giving yourself one more week for hopefully the stock to rally higher. Okay, and that's going to be the benefit. Okay, so let's simulate what I just did. Okay, let's simulate what I just did. So if I edit this spread, and instead of July 1st, I move this to July 8th, and instead of July 1st, I move the put to July 8th. I haven't got anything new for the call, so I'll leave it the same. I have got a break-even price for the put, so I'm just going to leave it the same out of simplicity. So the only thing I'm doing is moving the days to July 8th. So when you look at the risk profile, it's going to look like that. Now, it looks a bit deeper below the zero line, of course, because, we are in a position where we got a debit, right? And we are not collecting more premium, and expiration date is approaching. So we are getting closer to locking in our loss, which is what's going to happen if the stock doesn't rally. If the stock rallies, a different story, because next week we're gonna be rolling for more credit, so that's a different story. And as earnings approach and volatility rallies, so we may end up, in the green zone. But all of those various components of the trade I just described need to happen. Right now, we didn't have enough rise on implied volatility. Earnings are still 2 weeks from now, and we didn't have, most importantly, a rise on the stock price, which if that doesn't happen, yeah, forget about it. We're going to lose 151, which is how it's looking like at this moment in time. So playing patience, and we'll see in the following week or so if the stock rallies. Again, we really need that, and if that was to happen, it would help the trade. If it doesn't rally and keeps going lower, we're going to have the same challenge that Mark was mentioning on the chat box. We're going to have the very same challenge in the sense that we'll be rolling just to avoid assignments, but we will not be able to massage the trade in a way that alleviates. It's just basically a wasted time of massage, if I can phrase it this way. I guess you understand. Cool. So we are done with the review of the trades. Mark, well, letting expire and being assigned like last week is fine, but then when you sell a new put, you're gonna get whatever amount of premium, depending on the price of the stock. And while you may feel that this amount of premium is significant, the fact is that it will be in line with the other put you have. So if the stock rallied, you will lose less on the stock and get less premium, but the other put also pays you less. And if the stock drops, then you will sell the stock for a greater loss, but then the put you sell is getting you more premium, and the put you have pays you more. So in the end, since you are so deep in the money, no matter what is about the same. So to avoid margin impacts and for simplicity and all of the above, I would say rolling would be ideal. Of course, rolling for at least 3 cents or so he pays for the commissions. That's what I would be looking for. Okay. Again, we gotta understand that this trade moved too much against us. And while options are great and options give you options and we all love them and everything else, when a trade is moving so much against the trader, then you cannot do miracles. Okay, so we are now depending on the stock coming back towards the upper prices it was before to be able to massage the trade and get a benefit. Now it's basically massage, kind of like cardio massage. We're doing CPR for the stock to not to die, for the trade to not to die, but we are not alleviating the patient in the sense that there is no recovery at this moment in time. Right? And it's fine. If the trade dies, it dies. It's part of every trade. Every trade is planned in a way where we could get a benefit, we could get a loss. This trade looks like it's going to lose. We are just, happy to stay a bit longer just in case the stock rallies, because we're going to be able to do a bit more of that massage and get a little bit more of that premium. And instead of losing 150, we may end up with a loss of 120. That's why it's worth it to stay in. But now getting into the process of assignment, again, is not going to create a massive difference. And you got margin impacts. And now, let's say you do a mistake with the execution. Now you take more loss. Again, we got to assume that, it's, if you are a surgeon and you are in the operations room, this is not looking good. Okay. And therefore, you got to be realistic with the case instead of hopeful and or giving up on the patient. Okay, you don't want to give up because next thing you know, it rallies back up, and now you can really help. Okay, so we are exposing ourselves to that condition. We've seen cases like that before. It's not the first time that we've seen a trade go very strongly in our favor and then turn around and slaps us on the face, or a trade go against us very badly. Next thing you know, turn around and move very nicely all the way to the target. We've seen it. So we just need to go with the plan without letting emotions or perfectionism or hope to get in the way. Okay? Very good. Hopefully these comments make sense. Very good comments there, Mark, on the chat box. I'm glad to see your last comment there with understanding the difference. That's great. Perfect. Okay, so let's look for an iron condor. Okay, that's the plan. We got 30 minutes left. I'm going to take a sip of water. And let's see if we can find a good, nice, non-directional trade to put in the account. Okay, so let's begin with technical parameters. Okay, I'm going to start from right to left today, just to make it more fun. So earnings. We are looking for trades that don't generate earnings in the next 15 days. So we exclude the next 15 days. So at least if we do an iron condor, we know we have a little bit of time in front of us. We want neutrality. So in a perfect world, we find neutrality all the way from daily timeframes all the way to weekly timeframes, which means that the stock, it's likely going to stay fairly neutral. Other combinations are valid, but less advantageous. Okay, again, as you saw in the prior weeks, and as you just saw, my last settings were 2 days and 3 days, I believe. Why? Because since I mentioned the historic volatility that we find in the market these days, so given the level of historic volatility, you may need to be a bit more flexible with what strength is, and a bit less, a little bit of a greater level of violence could be seen as neutrality. Okay, why? Because overall the market is more volatile, so therefore, therefore the rationale behind my point. Okay, the scan list. I'm going to import the classical penny increment options list, and nothing else here. And then on the upper part, okay, I'm just going to be pragmatic today. I'm going to start scanning for top percent increase in the last 5 days. When we do that, we should have, a fairly long list. Okay, that's nice. So because the list is fairly long, let me be picky. And I'm just going to go back to advanced options. And I'm going to start where I normally start, which is the CIV mean greater than 80. The list should be shorter or nothing. Okay, great. I got nothing. And what if I go to volatility mean minus historic above 2 standard deviations? The list should be a bit larger, still nothing. So okay, so then that's it. Okay, so we're gonna go where I was, which is the top increase in the CAV mean in the last 5 days. And we got a list there with multiple stocks. We got Twitter, we got Pfizer, Popular, McDonald's, MedLife, Fidelity, Coca-Cola, and Assured Guarantee. So we are talking about stocks that are trading between $37 a share, $51.77, $2.46. So obviously, I want to start with McDonald's with $2.46. Reason why, especially when doing credit trades, we know that options are a derivative asset. The higher the price of the stock, the greater the premium received, and this is independent of the level of inflation or deflation of the options prices at this moment in time. So just to be pragmatic, I'm going to start with the highest price point, which is McDonald's. Since I got a few to choose, I'm going to start from here. Okay. So let me take a look at the cone. Here we go. Great setup. The red line all the way beyond the blue lines, which suggests there is a decent level of implied volatility in those options. We got earnings happening on this particular day, which is July 7. So we can go all the way to July 22nd. Okay, so we can do 1 to 3 weeks iron condors all the way to July 22nd. It's only 3 weeks, so I'm not going to bother to check the skew. I'm just going to go for it and check 3 expiration dates to see what makes sense when building iron condors. So we said July 8, 15, and 22. Those are the 3 expiration dates we're going to build. Again, this is a $200 plus stock, so the minimum risk to take would be 2.5. The maximum risk is 5, so I'm going to leave it like that. And then with that, we are going to be building 99 spreads, loading my template for Iron Condor preferred parameters. And now I am sorting here, and I get a collection of passes. Some of the passes are July 8 all the way to here, and then we move into July 15. So let's observe July 8 first, looking for a 1 week Iron Condor. July 1st, July 8 is right here, and we are talking about 257 and 236. The 257, we don't have 257, and we now get into July 15. So we're going to be looking at July 15. Okay. So sorting July 15. Here we go. We got a bunch of July 15 here. So let's take a look. July 15 is a monthly expiration date. And therefore, I would expect, just because there is more liquidity, often there is a little bit less price anomalies, and therefore less of an advantage. So 261 and 232. Okay, 261, 242. So 261, 261, 258. We got into July 22. So not enough premium with July 15. So then our last shot with McDonald's would be July 22. Here we go. And we got 4 passes here, which I'm going to discard directly because 256 and 261 is less than 261, and a further date is going to be more than 261. So not enough premium on McDonald's. So we're going to go for the next one. Okay. So next one, I would like to pick. Let me see here. Yeah, it's a shame that they are all. And by the way, this is also another problem when the markets fall. Stocks become cheaper. And again, we just talked about the convenience of getting stocks with price points which are higher to get more premium. And of course, when the market falls, everything becomes cheaper, including some stocks that have been doing, many stocks have been doing splits in recent times, isn't it? So, so that is not advantageous. Okay, so anyway, I'm gonna take a look at Fidelity. It's not the most liquid option chain. Actually, I believe they only have monthlies. Let me take a look. Yes, they only have monthly, so I'm going to pass. Prefer to have weeklies, so we have more to play with. Coca-Cola typically provides extremely little premium, but I said typically, not always, because especially in current times, given the current market conditions, I've seen some level of premiums that were relatively decent recently. The red line is beyond two of the blue lines, but there is one blue line beyond. So that's not super ideal. But anyway, let's check. So we can go all the way to 722. So let's try. Let's try Coca-Cola. We're going to do the same thing. 8, 15, and 22. So update. We are going to do 1 and 2. Okay, I'm fine with that. And we're going to build new iron condors. And we got 2 passes using July 22nd. So July 22nd only creates give us the passes. So let's take a look at July 22nd, pointing at 67.32 and 58. So 67 and 58. Oh, it's 65. Not enough. Not enough. So I guess today with the market, okay, yes. Coca-Cola today is only down by 0.1%. So I guess, lots of calm is shrinking the premiums. I've seen a bit more premium recently in Coca-Cola, but not today. Okay, so Popular is not that liquid. But anyway, since I'm going from bottom to top, let's take a look. Yeah, only monthlies. That's what I thought. So we're going to pass. MedLife. MedLife may be a valid candidate. Let's take a look at MedLife. Earnings all the way in August 3. So we're going to use all the way to July 29. The red line way beyond the blue lines. I like that very much. Let's see if this translates in enough premium. 729, and that is MedLife. So we're going to use 8, 15, 22, 29. And we're going to go minimum $1, maximum 2. And we're going to do 99 strikes. And we are going to sort it. Okay, so with July 8, we have some passes. Even though I am not happy to see we got missing quotes in July 8. We don't have missing quotes with July 15, which is the monthly expiration. So I'm going to go for July 15, even though July 15, based on what I said earlier, would normally provide less level of premium. But let's give it a chance. Okay, so here's July 15. So let's see what implied what range we would have in July 15. So we are talking about 67.8 and 57 something. So 67, no. And then we move into July 22nd in the bottom part. Okay, so I'm not surprised because again, on the monthly, often you get a bit less premium. So let's take a look at July 22nd. Let me see, July 22nd is right here. We are talking about 68, 69, and 56. Okay, so 69, we got 70. Missing quotes. Got 70 missing quotes, lack of liquidity. So I don't like it. So that probably means that July 22nd will provide the same issue. Okay, let's try again. Probably we may find the range we need, but then we may not have the liquidity. So actually there is just premium here. So the most I got here is 68. I got a bit more activity. Okay, zero volume, but a bit narrower spreads. I mean, let's give it final change just in case. So 69.8. So I need to find 69.70, which I don't. The most I got is 68.5. Yeah, and then we got into fell. So with MedLife, we've been close, but we didn't get it. This is what I was mentioning before when I said we have to be patient. market conditions like what we have at the moment. Okay, so let's take a look at Pfizer and then Twitter. So TFE. So earnings on 728, so up to 722. We are saving huge amount of time by using the spread select, because automatically all those trades are filtered out based on the parameters. So I know I'm just building quality trades here, even though if they don't pass the rules, I'm not going to take them. But we are actually saving a lot of time. So building 99, sorting this. Okay. We have a few passes with 15 and 22. So, not everything is being met. But liquidity seems to be okay with both expiration dates. So hopefully we'll be okay with the ranges. So let's take a look at 15. So 15, we're talking about 56. I'm looking at the light blue line, 56.47. Okay, so 56. No, it's not going to work. Not enough premium with Pfizer. And the last one was Twitter. Okay. So with Twitter, I have a little bit less hopes, in the sense that it's a very cheap stock. Okay, we got pretty high implied volatility. So all the way to 722. That would be the maximum date, given the fact that earnings are after. So 722. Yes, we got it right. And we're going to do minimum 1, maximum 1. We're going to do 99. We're going to sort. Okay. With July 8, we have passes. Okay, so let's take a look at what July 8 suggests. The dark blue line, it's 42.46. Okay, and this is the problem. The blue line is so far away because of this crazy speed of movement. So 42.46, we got, no, 42.46. 42.27, and that's July 15. Okay, so July 8 doesn't work almost, but it doesn't. So we are going to try July 15. How's it going out there, guys? You've been very silent. I know you're probably focused on what I'm doing. Give me a little feedback there, even if it's just a quick all good. So July 15 is here. We are talking about a range, a dark blue line, 44.23. So looking for 44. 44, that works. 44.25 and 33. 33 doesn't work. I need 31. Okay, so I need 44 and 31. I got the 44, not the 31, and then it fails. Okay, so let's take a look at July 22nd. I guess this is my last shot. And those are the quietest markets in the whole market with a high volatility. Later, we're going to change the neutrality to be different, and we may find something. But so far, we are going for the most peaky. We're talking about 45.30. So looking at 45, 45 is here, and 40 is here. Too good to be true, look left. Okay, sounds good. Yeah, the spreads are adequate. I'm very surprised. 45.28. Let me right click, risk graph it. Yeah, Joe, it is difficult. You're absolutely right. That was my point earlier when we started the session, isn't it? It is difficult. It takes patience. At the same time, if you repeat this process a few times a day, um, if you persist, there are times during the day where you may have a little bit of a peak of premium. There are times of the day. Um, for example, I'm thinking of next Friday as a great example. You have next Friday, not tomorrow, the Friday after. You have the unemployment number, for example. So again, there are times where you have a little bit of an extra spice in the market, or you just need to wait for a little bit of a hit in the market, and the market falling a bit harder or something like that, and now you get the premium you need. You just need to keep trying, and it's a bit tedious. I mean, we're saving crazy amount of time with the spread select, but that's the market condition we have. If the market was to move clearly in a direction to the downside or to the upside, and this comes with a yes, with a confirmation of the implied volatility of the call versus puts and vice versa. So then we'd focus on being directional because it's going to be easier to find setups in a market like this. But because we had that, contradiction, isn't it? So then I need to be non-directional to be a bit safer. And because the ranges have been very wide, then it takes more time to find the setups that work. Okay, that's what it is. We cannot fake it. Okay, the market is bigger than us, so it's time to be patient. We got another possible opportunity here, so I am graphing it. We have another here, 45 and 30. And we got 40, 46 and 30. Okay. 46 and 30. 45, 31, that's no good because it needs to be 30 on the bottom part. And then it fails. Okay. So I guess that we've got multiple trades here. So hopefully the last 10 minutes of the session will help us to find the trade that we accept. Okay, so I'm just gonna put this right here. Okay, and I'm gonna put this one right here, and then I'm gonna put this one right here, and then I'm gonna put this one right here. So we can compare the four setups because they all meet the criteria. So again, going back to the chart, let me reconfirm using July 22nd, which is what we're using, right? July 22nd, yes. So we're using July 22nd. The statistical range is 45 something, and let's call it 30. It was 30 a moment ago. I'll be okay, especially when a stock is low price. Being flexible with the decimal places is acceptable. Okay, so it's fine. So let me take a look at this. There we go. So 45 and 30, 45 and 29, 45 and 28, 46 and 30. Okay, so it seems that 45 and 28 seems to be the best one. The premium we'd collect is 24. This one is 25, but the range is worse. In the bottom part, we have $1 extra of additional profit zone from 29 to 30. Just for 1 cent, I would take the one below. 21 to 21 is the same. And again, here we got $1 more above, but here we got $2 more below. So I would prefer the one below, but still is worse than the one we have on the bottom left. So it seems that this one is the best setup. Let me reconfirm everything. So we are talking about 45, 46, 43, 42 to 53, 31 to 41, 51 to 58, 39 to 47. So this seems tradable. It's going to take a little bit of a while to negotiate the spread to get those 20 something, but I'm okay. It's a $1 risk. You you probably remember the rules, just in case. If the risk is 1, the raw risk is 1, we are okay to take 15% of that minimum as a premium. That would be 15 cents. We are being paid 23, so that's fine. Again, the problem is that Twitter is not a very expensive stock, so if you were to do this trade, you're going to need to do, I don't know, 10 contracts, whatever. So again, it's going to eat up a little bit of the profit in the form of commissions, but the rules are being met in that particular case. So that one seems okay. In any case, I want to recheck the one above, 51 to 59. Yeah, it's more or less the same size of a spread. I'm just doing the math to see if the spreads are different or about the same, just to input or take into consideration the slippage. Okay, so if I go worst case, here's something that you could do. So instead of looking at the mid, for the ones you buy, you can select ask. Okay, for the ones you sell, you can select bid. Okay, so it's kind of like worst case scenario. Okay, and that's going to be 5, the worst case scenario. And here, if you do ask, bid, worst case scenario is 6. Okay, so it's really about the same, and with a proper negotiation, we should be able to get at least 20 cents, I would say. So yeah, so I'm going to focus on the bottom left trade. This is the one I'm going to focus on, and of course, to approve it, okay, we also need to have the right setup on the chart with the UFOs to increase the probability of the stock to stay in the range. Okay, so from here to here, okay, from here to here, and if we drop to the 55-minute time frame, let me see. So we got 57% probability. This is very good. And now when looking above, okay, I don't have a red UFO close by. I may need to, oh wow, they're so far away. Is that in the middle of a gap? No. Okay, so hopefully a different time frame will reveal more unfilled orders. In the bottom part, I got nothing. Okay, let me take a look at the daily time frame. 28. So we are talking about 2020, okay? Okay, got it. So I need to load more bars. I loaded a whole set of bars. Okay, got it. So 10,000. So let's use a larger time frame and see if a larger time frame reveal unfilled orders above and below price. Okay, so above price, we have this UFO, which we could certainly use. Probability is 48.77. So I'm okay, as long as it's 48 or more, isn't it, for non-directional trading. So we can set a top area for the range to be 47. In the bottom part, I got nothing. So what if instead of 188, 189, I look at 144? Do we have anything below? No. What if I look at 233? Loading data. We're already reaching the top of the hour. It's unbelievable how fast time goes. In any case, again, the lesson today is also, being picky in a way of convenience. So, like, for example, the reason why I pursued this trade with Twitter is because for practice purposes, it's a great stock. It's fairly liquid, it's low price, meaning it's low risk, and therefore for practice purposes, I love to give you trades like that. Again, to make money, you need to use so many contracts because it's so cheap. So out of convenience, I would not bother, if you get my point. So, and then the other thing is, if the stock is is that low price point. On top of that, now you need to go back in time so much to find the UFOs. It's going to take an eternity. Okay, so which I'm not finding UFOs below price unless I go here on the daily time frame. Okay, which is fine because the probability is 52%, which is more than 48. Okay, so that would be the statistical range. And again, the profitability for that stock is from here to here. This is the profit zone. And we have a little bit of space above and a little bit of space below. In case the stock crosses this line, this is our zone where we expect the stock to go back inside the range. Okay, and we have all our management rules, which I will not summarize now because we have no time. I'm just gonna place the trade so we have it in the system so we can discuss it and manage it in future sessions. Okay, so we are here. This is the current price. This is the moment where we are entering the trade. Okay. Think or swim. We are looking at trading Twitter. We are looking at July 22nd. We are looking at building an iron condor made of the 46 and the 45 on the call side. So 46 and 45 on the call side. And on the put side, 30 and 29. So 30 and 29. So this is our iron condor, which has expected credit of 22. I'm going to shoot for 20 and see what happens. Hopefully I get filled. If not, I'll push it with a market order so we can have it. And I will edit the prices. Let me dock this. Okay. You're going to push it to be a market order. Please do not do this. Be patient to get filled. You should be able to get those 20 cents with a little bit of patience. Based on my experience, I would be quite confident that this is quite confident that this is the case. Okay, so since I'm not getting filled, that's not super ideal. So look, temporarily, I'm gonna document the trade by doing this. I'm just gonna do mid. Okay, here are the prices: 43, 49, 44, 40. So I'm just gonna now do. So at least I can get the screenshot. I can get it on the system before we conclude the session, and then if I get filled, I will rectify the values. So 43 for the 29, 49 for the 30, 44 for the 45, and 40 for the 46. Actually, the midpoints now are not as good as what I had before. So again, I guess a bit of patience, okay? Let me do this. I'm just out of being pragmatic. My minimum is 15. If it was less than 15, I would not even take the trade. So I'm just gonna add make this 53. I'm gonna make this 46. Okay, so let's say I got 16. I'm just gonna document this so you see how it's done. I go to the positions tab and I'm just gonna put it here. Okay, now these are theoretical values. I have not been filled, so I'm just gonna be monitoring that, and if I get filled later in the trading session, I will rectify it and I will let you know when we meet again next week. But so far, this is what we got. I mean, based on what I've seen earlier, I believe that we should be able to get 20 cents. And given the fact that it's such a cheap stock and you need so many contracts, while the rules allow you to do it at 15, I would certainly like to have a bit more because you're going to pay a lot in commissions since you have to use many contracts. Okay. Now, for practice purposes, it's quite ideal because it's a very low risk trade, isn't it? It's a very cheap stock. It's $1 difference between the strikes we sell and the strikes we buy. So it's $100. It's less than $100 risk per trade. So it's a nice trade for practice. So in that sense, great. But again, I'm not overexcited, given the fact that the stock is too cheap when it comes to the price of the underlying itself. Okay. Can you leg in using TSL? Not sure what you mean by TSL. You mean the thumb strength levels? Well, in any case, with or without any tool to leg in, I would, at least based on my trading style, I would not do that, because then you are taking a non-directional trade and you're making it directional, because if you enter one side and not the other one, it's because you have an expectation for the market to turn and then you will enter the other one. But what if you are wrong? But if you're wrong, now you're going to take so much more pain. The risk of the trade is going to be more, isn't it? So, sorry for that. So I'm not a fan. Okay, I'm really not a fan of doing it this way. And therefore I prefer, when I do an encounter, to go all in or all out, if you wish. Okay, but again, it could be a valid way to do it, as long as you don't do it just because the stock is cheap, just because you find a trade and you're like, okay, let's give it a try like that, meaning that you don't have a plan for it. So that I would see that as wrong. If you have a plan for it and it's your way to do it, and you have backtest data that shows that doing it like that works for you, etc., then nothing wrong. It's just the fact that it doesn't match my trading style. So that's why I sound maybe just a little bit not too excited about the plan. But it's not necessarily wrong. And by the way, many iron condor traders only do iron condors by legging into them, which again is not my style. Okay. Cool. Anyway, everybody, thank you for joining me today. We'll be in touch. I will see you as well next week during the meetings. One of the meetings is in July 4, by the way. So if you don't make it that day, I totally understand. It's a holiday. Happy 4th of July. Probably I'm the first one to tell you. But yeah, we'll see you next week, either in the trading session or the special meetings that we'll have to discuss TradeStation, if you happen to use TradeStation as a trader. See you soon, everybody. You guys take care. Bye-bye.